Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now let's just run through some of the news over the weekend. Biden ends failing re-election campaign. Now, usually when it comes to national elections, I mean, the US is the sort of, the biggest economy in the world. There's usually not too much to go on when they sort of change presidents, except, you know what? Trump is such a polarizing, crazy individual that he has already sort of laid out plans to start increasing tariffs on imports, and sort of tax the Chinese, a whole range of things, right? Really destabilizing, unsettling for international trade, and that can impact the dollar and other instruments. So we're going to see how that plays out. I would start to sort of factor that in as not as a political event, just a geopolitical event, and that's what Trump is. The dollar climbs at the end of the week. We had that cyber outage. Everything sort of calmed down. But what we did see later in the week is some really weak data, right, out of Canada and the UK. Now, what we're starting to see, and this is the dynamic nature of the current markets, is like central bank policy. Usually, let me just explain this. The Fed, they sort of control, or the impact of what they do controls global interest rates. Now, they're usually 3, 6 months at least in front of everyone else. So if they start cutting, then, you'd expect Europe to be doing it in 3 to 6 months and everyone else to sort of follow suit down the track. But the markets are so dynamic, we're starting to see central bank policy line up exactly the same as the Fed, right? And I've been sort of calling it. Like, you look at the dollar, we're on track for you know a weaker dollar across the board. But with those interest rate probabilities, if I just flick over to that, you got the Fed. I mean, no change at this meeting. But if I sort of just drill into that, you'll see that the interest rate cuts coming for the US are already sort of there, and they are sort of factoring in rate cuts at the next year almost, right? So that's where we are with that. Like, inflation's dropping, and that's what I mean. The Fed are trying to get ahead of the curve, because if you start to look at the what's happening here globally with regards retail sales, everyone's catching up. This is going to really impact the US dollar sort of short trend. I mean, or downtrend, I should say, because I'm like getting excited. The dollar's just going to start sort of tanking, but now we're starting to see a whole range of countries sort of catching up. The ECB cut, right, 60%. You got Swiss National Bank cut 80%. The Bank of Canada, right, this week, a 91% chance after those weak retail sales figures. That really diffuses this week's Bank of Canada meeting. I wouldn't be getting super excited about that anymore. RBNZ, well, they've sort of said they're on hold for a period, but it's a line ball decision. And the Reserve Bank of Australia, no change, right? They were sort of factoring in a hike, which would be absolutely crazy. Good trading opportunity, but that's sort of, the hike has drifted down to 22%. They're just going to sit on hold for the time being. So out of all of these, what does it mean for us? Well, to me, it really comes back to the majors, right? When you're trading the US dollar against the other currencies, if the central banks are all doing the same thing there, well, it's going to make trading those instruments a little bit trickier, right? You sort of see it takes the pressure off the US dollar and sort of evens things out. So you know what? Trading the crosses going forward could be the way ahead, because we do have, once again, if I just come back to that interest rate probability chart, we do have some disparity here around some of these central banks. Like, at the moment, it's a line ball decision here for the Bank of England. You know what? It's no change, 58%. With those weak retail sales figures, you're going to start to think, well, I wouldn't be surprised to see that cut percentage go up. But then you're looking at, say, the Aussie against a lot of these instruments, maybe the Kiwi if they remain on hold, Bank of Canada, Bank of England, Swiss National Bank, the Fed, ECB, all looking to cut. It makes trading the majors tricky, the crosses a little bit easier to differentiate. So make sure you sort of factor that in. If we look at the on the longer term charts, right, the euro has sort of popped above. We've still got that sort of French geopolitical act, or issue, I should say. in the wins. So that's sort of holding back any sort of upward moves on euro. Sterling, well, still breaking higher, excuse me, but the fact that we might start seeing Bank of England cuts soon, like if they don't cut, yeah, sure, sterling remains strong. But if we do get a surprise cut, well, that's just going to be back in the range. The Aussie, well, I think the market's already factoring in. The central bank has been very tough on their sort of decisions, but you know what? The numbers are starting to add up. And when you've got an instrument, they're saying they're on hold, that can turn to cuts very quickly if the Aussie economy starts to line up with the Canadian, European, the UK economy. They're all sort of starting to look a little bit smelly. And unfortunately, as I said, that lines up with the Fed. So that's what we've got at the moment. The Swiss National Bank expected to cut rates as well. So dollar Swiss still breaking down. Dollar yen. This is where I think dollar yen will become the flavor of the month, right? Because it's less of an interest rate sort of trade. In fact, if the US starts cutting rates, well, great reason to be selling dollar yen. And that's where I think out of all of them, dollar yen will make the most sense, right? After a year or so of just being like, whatever, it's now going to be prime time. Dollar CAD, middle of the range. Kiwi, still under pressure. But like there's no easy lay down trades. And that's what I'm saying with these the way the dynamic nature of the current markets, you look at these central banks, global central banks, and look who's cutting. I tell you what, there's a tsunami of interest rate cuts coming across the board. May not be this month. Okay, so like the Fed aren't expected to go until their next meeting, but then it's going to be on for young and old. Same with the ECB, right? It's going to be all hands on deck to try and work out what's stronger than another instrument, right? That's what I'm saying. The crosses might be the way to go. Now, let's just have a look at the global markets as we start the week. US equity futures up. We've got a clear risk on sentiment, but euro, sterling, Aussie, Kiwi up, and the dollar down. That's pretty obvious. Commodities up. You know what? US Treasuries pretty steady, right? There's no sort of significant change there to sort of go a little bit mad on. So we've still got sort of like okay markets, but we're just not in getting the markets. I think is getting a little bit confused with the medium to longer term view of various instruments. Like the dollar was a standout, sure, going down. Now we're starting to see a lot of these other countries catch up very quickly, which is annoying because it takes out a lot of opportunities to get into those nice, easy trend trades. But we'll have to see how that plays out with the data as we go. Now, this week, when we are looking at the numbers, if I just get up trading economics, the key days, right, like most weeks, Wednesday, Thursday, Friday. Now, this is the last week of the month, right? And it's notoriously pretty quiet. The German numbers here, you know what? They're like a second tier number. I wouldn't be getting too excited. The Bank of Canada interest rate decision completely diffused by those weak retail sales figures last week. Like the cut is fully factored in. Okay. So I think they're just going to cut and go, yeah, we're just going to keep an eye on things, right? So don't expect much out of the Bank of Canada interest rate decision. No change. So there's no trading opportunity on the release of the data either. So don't get sort of all excited. If anything, durable goods, GDP numbers out of the States may give us something to work with. And then you got the PCE price index, personal income and spending on Friday, right? So you got a few numbers here. So the US dollar is going to dominate at the end of the week. It would be nice to see these numbers come in weak. Then hopefully we get the dollar downtrend dominating once again, right? That's where we just need some sort of consistency to make, confident trading decisions. Once we know it is going down for sure, well, then you can jump on it, right? So let's see how that plays out come Friday. Outside of that, if I just bring that chart back into sort of the second tier and top tier numbers, there are numbers in between here, right? You got some existing home sales numbers, like some the PMI numbers there in the UK on was that Wednesday. You've got some S&P numbers here, PMI numbers out of the US on and Wednesday there as well, and new home sales. Like there's a few little numbers in between, but the week lacks the killer punch. I mean, even the PCE price index, right? I've started to sort of get less excited about that. It was more the media sort of pumping up, yeah, the PCE price index. But the Fed have already told us what they're doing, and we know exactly the structure. All the numbers have just been drifting either as expected or slightly weaker. It's more like a cross check on those days to see if the numbers line up. But you know what? That's all we can do. The big danger for me is Donald Trump getting reelected. I mean, it was so destabilizing for international trade across all countries, not just the US, that it's a tough one to swallow. So we're going to see how that US election rolls out, because we're going to start to see the dollar sort of move around on that outcome. All right, guys, that's it for me. Not a hugely exciting week, really. Wednesday through Friday are your good trade days. So make sure you sort of tune in if you've got time. Outside of that, you know what? Just keep an eye on the various instruments, right? We've had a bit of a clean out on the hourly charts at the end of last week. Let's see if the dollar can't sort of just start to drift lower. I'm still thinking, right, overall, the dollar is going down, and that's built in with those Fed interest rate cuts coming up. So I'm still playing it from a weak dollar side. I'll see if I can make some odds and ends of some of these crosses as well. All right, guys, have a good trading week. All the best. Cheerio.